Hi, my name is Rick Bloodworth. This is the Common Sense Christian Financial Channel, and I want to talk to you again today about the silver market. Silver market in the last year has done quite nicely, but especially in the last 2 months, it may very well be that you've been investing in physicals and you may have taken some profit out of that. What do you do with that? And so I'd like to give you a little bit of a strategy here. It's going to be one that does not involve a great portion of your overall wealth or your overall holdings, but it may give you something that will not only allow you to put the money to use that you're holding now, if you're waiting for silver to go back down so that you can reinvest, or just something to do with the profit that you may have made that you're not necessarily ready right now to put back into the physical silver market. And so I'm going to give you a strategy that I have used for a number of years. Hopefully it'll be something that will work for you. Again, I've done this for nearly 45 years now. I think it was August of 1981 that I first started investing in silver, but it was probably the summer of 1979 while I was still in college that I started following the silver market. And so I watched it for maybe 2 years before I made my first investment in it. And I was glad that I did because I was able to kind of get a feel for what the silver market did. And once I got involved with it, I was at least familiar with it. There's some new investors right now that have very little background in the silver market that are starting to invest huge sums of their overall wealth. There's a fear of missing out when any market starts to go up, and our society has kind of a Bitcoin mentality, the idea that you can maybe grab onto something for a few $100s that'll be worth tens of thousands of dollars in just a few short years. Well, if that's what you're looking for in the silver market, it's very likely that you're not going to find that. You will find, if you learn the market, that it is something that hopefully will give you some decent returns over the years. And so I want to talk about this strategy. In the last month, you might be just blown away by the graphics, by the way, of what I've got over here. If you're an experienced silver trader, you immediately recognize this is the basic pattern for silver for the past month. Silver started out 30 days ago, probably somewhere around $46 an ounce. It had been steadily rising over this year. It had been as low as a little bit below $30 an ounce this year. And then as it started to gain momentum, about a month ago, it was worth about $46 an ounce, and it continued to rise all the way up to $54 an ounce. That's an $8 gap. Now, when I first started investing, that was a huge move for 1 year. As a matter of fact, there were some years when silver just hardly was moving at all. I can remember years where I could invest in silver futures in the $4 to $5 range, and it might not move 50 cents in a year. So the idea that it's moved $8 in 1 month gives you an idea of how volatile silver can be once it starts making its move. And so we've had a very volatile month. It started out in the last 30 days about $46 an ounce. It got up as high as $54, and it's been down, bumping the bottom again at about 46. It's kind of started a little bit of a channel in which we can start seeing a little bit of a pattern. Now, will it stay in this channel for much longer? Who knows? It could stay in that channel for a year. It could be there for a few days and either break out to the bottom side or to the lower side, or break out and continue to move upward. And so nobody really knows about that. I've certainly been investing for a lot of years and have listened to a lot of people who have acted like they knew. I still, to this date, have never found out anybody who is an accurate predictor of what the market's going to do in the short run. In the long run, because we live in a fiat currency society, any type of commodity is going to slowly go up over time, and at portions of that time it'll go very fast. And so that's what we've experienced in about a 2-week period where it went from 46 to 54. Now it looks like it's starting to settle down a little bit. Whether that will last, nobody really knows. But what I want to talk to you about is what to do during these little channel periods. And of course, this fairly good sized channel. Silver's very volatile right now, and you can take advantage of that if you have some strategies that allow you to do so, but also allow you to do so in a prudent manner. Now, just a few weeks ago, I sold about 100 ounces of silver at a little over $50 an ounce, and that was roughly a $1,000 profit over some of the silver I had purchased earlier this year. Not a great big profit, but a little bit, and I always try to take a little bit of the profit from my overall holdings. I've mentioned before, I like to take about 25% of my overall holdings as an investment account and use that to take advantage of upward cycles. When it's going up, I'll sell a little bit at a time incrementally, and then when it starts going down again, I'll start buying it back incrementally. Again, I sold silver a few weeks ago at a little over $50 an ounce, and so after my taxes on that, about a $1,000 profit, and my capital gains taxes will probably be around $200 for that. And so I've got $800 to play with. The other $4,000 that I've got remaining, I'll use to reinvest if silver goes back down to about $40 an ounce. And so you might be absolutely convinced that's ridiculous, it'll never go that low again. You likely may be right, but you may be wrong as well. And so what do you do once you have pulled a little profit out of the market with that profit? Well, you can either hold on to it, you can keep your powder dry, so to speak, and that's what I intend to do with the vast majority of what I've sold. But as far as that profit that I made, that $800 I've got left over after taxes, well, what I do very often is I put that into the stock market. There are various brokers online that do not charge a commission. Obviously, they make a little money somewhere between the spread of what's bought and sold, but they don't charge an outright commission. I like TradeStation. They don't charge an outright commission on your buy or sell orders, and so I just put that in that account, that $800, and since that point, I've been trading it over time. And what do you trade it in? Since I know the silver market, I try to stay with silver stocks. There's not a lot of silver stocks, at least not ones that are stable. You can gamble if you want and get involved with the junior miners, and you might do very well at that. Many people have, but you might lose everything you have at the same time. And so I like to stick with ones that have been around for a few years. Stocks like First Majestic, Sprott's, PSLV, that's fairly stable. You might want to dip your toe into the gold market if you haven't before and invest in a gold stock, something like Barrick or Hecla Mining or something like that have been around for a long, long time. And so whatever it is you do, you're not taking a very big portion of your money, but you're buying a few shares until the market starts to break out of this channel. Or at least that's the strategy that I'm using. I started buying somewhere around here, and when it would go up a little bit, I would sell and take a little bit of a profit, and then when it would dip down closer to the bottom of the channel, I would buy those stocks back, and in that short period of time, I've made maybe 15% profit. It's not a whole lot, especially when you look at what silver's done recently, but for a 2-week period, that's not bad. An annualized 15% profit turns into 400% annualized profit. Don't get me wrong, I don't think I'm going to 4 times my money, but what this does, it allows me to keep up with the market. It allows me to do something with part of the proceeds of what I have sold recently. And again, this is just for that one little sale. I do it with different sales, and so I have different amounts within there. But for this sale, I'll buy and sell during that time within this channel, and hopefully I'll not only be able to make a little bit of profit off of that, but I'll also be able to keep up with the market a little bit better than if I was not buying or selling at all. I have had a strategy for quite a number of years of dollar cost averaging into the market and keeping 3/4 of that for a long-term savings account. I try not to ever touch that. It's a legacy account for my children and grandchildren, hopefully, or it'll be a rainy day account if I have some sort of emergency. Maybe my wife and I will see a once-in-a-lifetime investment opportunity. Well, we'll have some capital to be able to take advantage of that. It would take something like that to be able to break into that savings account. But the 25% that we use for investment, speculation if you want to call it that, that's something that we can kind of play with. We can buy on the way down and we can sell on the way up. And through the years, that's proven to be a fairly good account for us. And so when you're in a channel, what I like to do is I like to take some of the profit that I've made from a recent sale and just put it into the stock market, into silver shares or gold shares, and invest in the channel until it breaks out of the channel. If it goes down below this, below the $46 an ounce, if it goes all the way down to $40 an ounce, for example, I'm probably going to lose 30 or 40% of the value of those stocks. But I'm going to be able to buy the entire 100 ounces of silver back at that $40, plus I'm going to have the remaining stock account there. So I will have locked in that profit, and if it continues to go up, again, silver shares, gold shares, mining shares in general, typically will outperform the market when it's going up or going down. And so if it breaks out through that, I'm going to be able to continue to ride that all the way up once it breaks out of the channel. So anyway, this is just one strategy, and it's for just a very small portion of your holdings. It's not for everybody, but for those who have a little bit of time to investigate different stocks, to make sure of what they're investing in, it might be something that will allow you to make your silver investments a little more profitable. There is one more thing to consider on that. When you buy and sell mining shares or any type of shares, it will give you a fairly accurate reflection of where the silver market is. If you were to buy it at $46 and sell it at $48, well, you're going to make that whole $2 an ounce in the stock market. The stocks are going to reflect probably at least that. But if you were to buy 100 ounces of silver, for example, at 46 and sell it at 48, well, you might actually lose money on that, because if you buy it at 46, your coin dealer or metals broker has to make a profit in order to keep the doors open and pay their salaries. So you might have bought it at 46, but it cost you 47 an ounce. And you may have sold it at 48, but you may just be able to get $46 an ounce on the buyback price. And so even though the market's gone up $2 an ounce, you've actually lost $1 an ounce. For 100 ounces, that's $100. So this is why I like to take a little bit of that from the profit that I've made. You cannot buy and sell physical silver very nimbly. It's something that you're always going to be paying commissions on. But if you invest a little bit of your profit, something you've already made and you're not afraid of losing, it's not the mortgage money, then it's something that you can take advantage of the short-term rises and falls. One last thing, I am very much against short selling. You can lose a lot of money very quick. And a lot of people have bankrupted themselves on that type of a strategy through the year. Don't short sell, just use money that you have that you can afford to lose, and be very prudent with it. Buy what you can afford to buy and only sell what you have in your account. There's an old saying in the commodities market. It goes something along the lines of this: he who sells what isn't his'n buys it back or goes to prison. There's been a lot of short sellers through the years that have been very sorry that they ever got involved with that. So let me encourage you not to do that. We want to make this investment something that is prudent. As Christians, we want to be good stewards of the funds that God has given to us. That means we're not looking for get-rich-quick schemes. It also means that we're not gambling with our funds. Taking an acceptable risk is not gambling. If it keeps you awake at night, you probably ought to just get out of it completely if you get to that point. But if this is something that you are interested in, if it's something you've been doing for a number of years and have found it to be profitable and you know what you're doing, investing in silver is something that through the years, in the long term, I believe will help you to be the best steward of the funds that God's entrusted you with. Well, that's the video for today. Let me know what you think in the comments. I always am interested in other people's strategies, and I'm always interested to know what you're thinking. So be sure and let me know in the comments. I always try to answer those comments, and I always appreciate them. But appreciate you watching today. I hope we'll see you again next time. God bless.